For more on how the wave of revolutions, the so-called Arab Spring, is affecting investing, we have with us Mahmoud Salem of the Bank of New York Mellon, BNY Mellon. He's in charge of issuer services in the region and has helped structure IPOs and M&A deals for companies there. Welcome to the show.
Thank you very much. Delighted to be here with you.
Well, I want to start off with Egypt because we did just see the resumption of trading after 60 days of a freeze in the Egyptian markets. You must have been biting your nails when it comes to depository receipts and how they're traded here.
Absolutely. In fact, I just came back from Egypt. We were delighted how depository receipt was quite instrumental for fund managers. It really provided an entry and exit point for fund manager, but also did
You're talking depository receipts rather than direct trading of equities.
Absolutely. I mean, the direct trading, the fact that it's been halted for that long, it obviously gives tremendous amount of trouble for investors. Their entry point and exit point is very important, and the flexibility of exiting the market is critical. Depository receipts trading on London provided that platform for them, which was very helpful. So it also provided a tremendous amount of rebalancing between the investors. So you see a lot of value fund managers going in, you see some of the emerging market exiting. So, but also provided, most important, a benchmark. So when the Cairo Stock Exchange opened up, these companies that traded on London in the form of DRs have used London pricing as a benchmark. In fact, some of them went up on day one, such as Commercial International Bank and Orascom Telecom.
So when we look at the Egyptian Stock Exchange in Cairo and see it's down, worst performer of the year, down some 30%, trading again halted yesterday because of such a rapid decline in share price. You're saying that that's not necessarily the most accurate way to gauge actual value.
I mean, absolutely. I mean, what we are simply saying, DRs provided a huge value for international investors because it provided them a platform to trade on while the market is closed.
The only way.
The only way. So, but also it helped Cairo Stock Exchange when it opened up to give it some parameters, some reality, some sanity in relation to the company that's traded on London Stock Exchange.
So where are you seeing interest from right now? Because there's this idea that geopolitical risk is only going to heighten throughout the region, and there's some apprehension about putting money to work. Who's being bold?
Well, I think it's very difficult to paint one brush in the Middle East. Some countries has almost turning the page, is the case of Tunisia and Egypt. Others, as you pointed out earlier, have issues to deal with. But we've seen a lot of appetite from value fund managers that take a very long run approach. So they go in at these very attractive prices. If you look at Egypt on a PE ratio, it's 8%, to 8, which is very attractive. So a lot of them are really sending their analysts, analyzing the right company. There's tremendous consumer population in Egypt. So there's a lot of opportunities. And the bold ones are really the value fund managers for taking the long run approach.
When you say value fund managers, are they mainly hedge fund managers that are willing to take this risk?
Well, I think some of them are, but I think when you see where the growth is coming from, where the orders are being lined up, it's coming from the long-term value fund managers.
We've been hearing a lot about this plan of financial aid of some sort to come from the Gulf, particularly to Egypt, to some of the other states. Is that where you're also seeing investor interest come from?
Well, certainly some investor interest is going to be coming from the Gulf, but I truly think a tremendous amount of interest coming from the U.S. and throughout Europe, and specifically in the Midwest and northern part of Europe. So there's a good, really, appetite for Egypt. Egypt, the story hasn't changed. It's a large population, huge infrastructure project, consumer, so nothing really changed. What changes is the political situation. And as the politician and regulatory bodies really guide the country in a stable way, it would just attract more and more investors.
Where do you see the most opportunity there? Because, yes, there's an untapped consumer base, but there's a consumer base facing even higher levels of unemployment. Sure.
I mean, absolutely, there's core industries that are very healthy, that just a way of life, you cannot avoid it. The consumer products, the food industry, the banking, these are day-to-day stuff that people have to deal with. So there's a lot of opportunity on that front. With population north of 80 million, it's just inevitable. Nothing really changed on the fundamental.
And what does BNY Mellon do? I mean, when you were saying that this was helping to create some sanity with the Egyptian market when they reopened, does that mean you were talking to the central bank governors, you were talking to the head of the exchange about
absolutely, quite front and center of it. We were asked on day one to close the trading on London Stock Exchange, which we said absolutely not. That's not the right approach. We've been working very closely with central banks. So in fact, we set up a conference call for the Deputy Governor of Central Bank of Egypt with the investors in the U.S. about 2 weeks ago to share share his views on the outlook for the market in Egypt, provide some comfort and confidence level. We're also working very closely with issuers to keep all line of communication open. This is the time to talk. This is the time to provide him updates on a regular basis. The worst thing is to simply go away or put any challenges into coming into investment in Egypt.
All right. Thank you very much.
It's a pleasure.
Good luck to you.